Okay, welcome to the Swing Trading with Cycles channel. This is where we time the market without predicting the market. We do that by identifying trend reversals and then getting in early. Not at the bottom, but close to the bottom so that we can ride the trend, right? So today we're going to review the broader markets. We're going to look at the S&P 500. We'll also look at QQQ and IWM as well. And so this is the daily chart we're starting with. And so keep in mind, I'll just assume that you've looked at the Cycles 101 content. So I'll assume that you're familiar with that terminology. And so this was our last daily cycle low here, day 54. So a 54-day cycle, pretty long, topped out on day 40. Then we have this little rally that was pretty convincing in real time. Then we gap down. This is your CPI print. So we still have that gap here. So if we were to get a more sustainable rally, this area, I mentioned this in a previous video, definitely becomes a sort of target, at least the underside of this. But we continued to roll downhill. We got this little pop here, and then we continued to move lower. So that was your lower high, your lower low. But look what we have here, right? We were talking about trends, right? This is a higher high versus this, right? I just said that this is a lower high. Let's just make sure that we draw this out so that it's clear. That's your low, that's your high, a lower high, right? That's your low, that's your high, also a lower high. And I'm not drawing all the lower highs here, but you kind of came down here almost in a straight line. And then you bounced up, only survived that for one day, then you came down. And now look though, you've done this, right? And now CPI is going to be everything, right? CPI is going to tell us, do we fall below this gap and keep going? Or do we, I suspect what will happen, whether we resolve positive or negative, I could see a world where the CPI print causes us to close this gap, right? So we have this gap from this day to that day. And so I could see the CPI causing us to close the gap. Now it's a question of, do we close the gap and continue lower? So something like this, then a bounce up, and then we continue lower, and then we're off to new lows, right? Or do we bounce, right? So something like, let's say this, then we come up, maybe test it again, then keep moving higher. We know that we have the CPI number on the 13th. That's what this line is. And that would assume a 26-day cycle. That said, you could argue, and I'll take this line off, you could argue that this is a daily cycle right here at day 18, right? Now, we crossed above the 10-period moving average. That's what this line is. We're comfortably above it right now. Now, we could also, again, tomorrow everything is about the jobs report. So we could find ourselves closing below the 10-period moving average tomorrow. That's really, that's going to be one of your signals as well. All that to say, this doesn't have to be a new daily cycle, especially if we get a violent reversal lower. This just becomes a lower high within a daily cycle that's continuing to decline. And in that case, maybe we do get some kind of rally off of CPI, and then maybe that gets faded. Or CPI causes us to plunge even lower, and some other catalyst causes us to have that sort of short-term bounce. But tomorrow, your real level is watching this gap, which is still unfilled. And this is the SPX cash on the SPY chart. This gap, there's like a ghost wick, so just be aware of that. But notice we've just basically consolidated the last 2 days, right? So we had this nice move up, that made a higher high above here. That made this a swing low on day 18. Then we had the gap up. Then we had a green day, but really didn't make much forward progress. And then today was just an inside day, didn't make a new low. So we really want to see us hold the 3726 area in the S&P cash. I suspect we could drop below it, take ourselves even below 3,700, and then we could see a quick pop back up. You want to watch for that. The jobs number and the CPI number, for that matter, are notorious for trappy action. And if we think about the weekly chart, we are on week 16. And it's notable that the last weekly cycle ended on week 16, and it caught people off guard. I talk about this multiple times. Weekly cycles don't tend to be, as short as 16 weeks. In this case, we had a bit of a waterfall decline. We had this little bounce for 3 weeks, for this week, 1 week, and then we consolidated for the most part. I mean, this is actually still inside this range, even though, I mean, obviously it was really ugly to live through this, right? But we bottomed on week 16 and then we rallied for 9 weeks. And now we spilled over. We made a new low below this. And so as we think about trends, when we make a new low, when we make a lower low, we expect the next move to be a lower high. Now, what's interesting is we do have a swing low here, right? We crossed above the low from last week. So just to be super clear, last week becomes a swing low on week 15. So it is entirely possible that that is actually our weekly cycle low on week 15. So we had two really short weekly cycles. We had one that was 16 weeks here and then another one that was 15 weeks. And this is actually week 1. The jobs report tomorrow will probably tell us that, right? We're either, and well, not for sure. If we get a bearish reversal, then it'll signal that we still are declining in the weekly cycle. But if we get a bullish signal, it doesn't necessarily tell you that, especially since we have the CPI number coming mid next week. So unfortunately, we're in still kind of wait and see mode, even after the jobs report to some degree. Unless you get a really violent bearish reaction, then it's unlikely you're going to get kind of bailed out by the CPI number. So it's complex trading here, but all that to say, it could be it's entirely possible that we're in a new weekly cycle. That's something that people that's a scenario to be prepared for. And as we think about the monthly chart, we know we made a new low last month. This is month 31 now that just opened. And we expect that we're in a 3-year cycle decline. And that the 3-year cycle tends to be around 3 years, so 36 months. And so the presumption is we continue lower into the 3-year cycle low somewhere around March 2023. As you can see on this monthly chart, we've been making lower lows and lower highs, right? Just as we talked about. So really on this chart, we need to get all the way to 41.28 to make a higher high on the monthly chart at this point, which is obviously a great distance above where we are now. But it does tell you that if a rally picks up steam, we could easily have a pretty violent rally. Even one that doesn't make a new high gets all the way up to around 4,100 and then fails. So you've got to be really nimble here, right? Like you could have a really violent rally that again is still not a long-term bottom, and so you need to be aware of that. Are you going to trade it? Are you going to get faked out and sort of buy right at the top of the rally before it kind of rolls over? I certainly hope not, especially if you're paying attention to this channel, obviously. And so we're going to watch. So, because right now, all this is an inside month. And obviously, the lows from last month are like the low end of the range, right? We know 41.29 is a high end. And of course, 35.84, which are the lows that we made last week. And, right now, we're almost 200 points above that, but still like 300 points above this. So kind of in no man's land a little bit, which is great that we have that jobs report coming up. And so I'll flip over to the Qs really quickly. Pretty much identical position. This is your monthly chart. In the case of the Qs, we need to get all the way to 311 to make that new monthly high. And for IWM needs to get to 189.86. So, 17 points from here, basically. And so as we'll stay on IWM, we'll look at the daily, same exact picture really as the S&P in the sense that we have this gap. Now here, we kind of filled it a little bit more, right? Like, so there's a little bit less of a gap in a way, but there is still that gap there. And I think you could easily see a spike lower there. Again, remember that the CPI happens at 8:30. So these indices aren't going to start trading until 9:30. So the action is going to really happen in the futures, and a way to get exposure to that is actually the micro futures, a very sort of economical way to get exposure there. And then you look at the weekly chart again, same thing. We have a swing low on week 15, and in the case of IWM, that next proximate target would be around the 181 level to get above this lower high. And let's look at the Qs at the weekly level. So the Qs are looking the weakest of all. That's important to note. Did you just notice how the IWM chart was well above the high Here, we're actually now below where the high was from last week, even though we did break above it so far. Again, not to belabor the point, it is all about the jobs report, but this isn't a subtle clue to you that tech doesn't seem that hot. Let's look at SMH actually, just to kind of. So SMH is actually looking much stronger than the Qs. So that's a tell for you. If you wanted to be inclined to go with tech, SMH semis is probably the way to do it, as opposed to just like kind of broadly QQQs. Yeah, right. So that's really good to know. But of course, again, as I keep repeating, it's all about the jobs report. And we'll look at the Dixie really quickly. I tweeted about this. Important. We had a swing high on week 17. Like we were below this low. And now we're well above. We're decently above it. And we're forming a hammer candle. Again, that jobs report is going to do everything. It's going to tell us how we close for the week. And the reason we got that hammer candle, if you look at the daily chart, we made a higher high above this consolidation zone. So as we came down here, right, we came down, this was October 4th. That next day, we failed to make a new high or a new low, which is called an inside day, right? But it was big and green. And then we opened down here, right? So like in the middle of the range as opposed to closer to the high, which is interesting. But we managed to make a new high on the daily, and now we're opening on day 18. So very interesting. You're going to want to watch as the jobs report comes out. What happens if and when we drop into this consolidation zone? Do we get a quick spike out? That tells you maybe we did get a really early DCL. Or does it kind of hang there, linger for a little bit? That's going to be a little bit of a tell for you. And I'll talk about the metals in a separate video, but this is obviously going to be very correlated with those.